Your brokerage doesn't know you left the country. And in 2026, that silence is costing nomads everything. Compliance algorithms at major U.S. brokerages are now cross-referencing login IPs with updated KYC protocols, and accounts flagged for residency mismatches are being frozen without warning. Subscribe now for the legal stack that survives 2027. Because today, I am breaking down exactly which brokerages work, which ones will cut you off, and how to hold your wealth across every border, legally. The biggest brokerage problem in 2026 is one the top 10 lists consistently ignore. While Forbes recently released their list of the 10 best online brokerages for 2026, most of those platforms are strictly for U.S. residents. Unlike 2025, where you could sometimes mask your location with a VPN, 2026, Know Your Customer protocols are now integrated with digital ID systems. Cross-border account access is flagged automatically, and the platform does not call you to verify. It just freezes your account. If you are a U.S. citizen living abroad and you still have your wealth in a domestic-only firm, you are one proof of residence request away from being forced to liquidate your entire portfolio. This triggers a massive, unplanned tax event, one you did not budget for and cannot easily undo. You need a custodian that understands the nomad lifestyle, not one that treats it as a fraud risk. For the location-independent investor, there is really only one industry standard: Interactive Brokers, or IBKR. According to a 2026 review by U.S. News & World Report, IBKR continues to lead the market for international access and sophisticated tools. They currently accept clients from over 200 countries, and that list keeps growing. Most importantly, they do not close your account just because you move your tax residency from the UK to Thailand, or from Portugal to Georgia, or from anywhere to anywhere. While many so-called best UK online brokers in 2026 still freeze accounts for non-resident compliance failures, IBKR allows you to maintain your full holdings seamlessly across borders. That portability is what prevents the forced liquidation trap and keeps your capital working while you move. It is not the cheapest platform, but for a nomad portfolio, it is the most important. If you are an American, the brokerage problem gets significantly more expensive. The IRS classifies almost all non-US ETFs and mutual funds as passive foreign investment companies, or PFICs. Buy a local ETF while living in Europe, and you are subject to punitive US tax treatment that can reach effective rates of 50%. Not 20, not 30, 50. You must stick to US-listed ETFs like VTI, VXUS, or BND, even while living abroad, to remain compliant. For non-US nomads, however, the strategy is the opposite. You want to avoid US-listed assets entirely to escape the 30% non-resident withholding tax on dividends. That asymmetry is not obvious, and it catches people every single year. Heading into 2027, knowing your tax passport is as important as knowing your investment ticker. Get this wrong and the tax bill alone can wipe out a decade of gains. For the non-US nomad, the 2026 gold standard is the Vanguard FTSE All World, ticker VWCE. This is an accumulating ETF, meaning dividends are reinvested automatically inside the fund, not distributed to you as taxable income. That creates a massive tax shield. Because there are no distributions, you do not trigger an annual dividend tax event in most nomad-friendly jurisdictions. You only pay tax when you sell. That is it. Foreign institutional investors have been flowing into global equities for 8 consecutive weeks as of mid-2026, and nomads holding VWCE are capturing that upside without the administrative nightmare of filing in multiple local tax systems simultaneously. That simplicity is vital for maintaining a clean 183-day rule compliance strategy as you cross borders. The exposure is global, the structure is clean, and the annual compliance burden is minimal. It is the ultimate set and forget tool for reaching a $600,000 FIRE portfolio. If this video is saving you money, hit like. It helps more nomads find this content. Heading into 2027, new markets are opening their doors to foreign investors, and that sounds exciting. The Philippine Stock Exchange is proposing rules that would allow overseas stocks to trade directly in pesos, a clear signal that geographic arbitrage is moving into the mainstream. But do not put your core capital into frontier markets. Here is why. These markets offer high yields precisely because they carry high structural risk, thin liquidity, currency volatility, and investor protections that are years behind Tier 1 jurisdictions. A 10% annual yield means nothing if a currency devaluation or a regulatory freeze wipes out your principal overnight. EMIs like Wise or Revolut are excellent for daily spending money. They are not a home for your life savings. Your core brokerage capital belongs in a Tier 1 institution, with robust investor protection and a clear legal framework for foreigners. Explore emerging markets with a small satellite allocation, never with your foundation. If your portfolio is crossing the $200,000 mark, you need to consider a holding company. By 2027, the individual nomad will face tighter reporting requirements under the OECD's BEPS framework, and the compliance burden on personal accounts is only going up. Many sophisticated investors are already using a Wyoming LLC or a BVI company to hold their IBKR accounts. This provides a layer of asset protection and can simplify the intergenerational transfer of wealth. It also separates your personal liability from your investment portfolio entirely. According to the Tax Foundation, the U.S. hybrid tax system makes these structures complicated, but necessary for legal tax mitigation at scale. Whether you are using a Wyoming structure for its $0 state tax or a UAE free zone for residency, the goal is the same: decoupling your wealth from your physical location. You now have the framework to solve the brokerage problem and keep your investments protected as you cross borders. But a global portfolio is only as strong as the legal entity that holds it. In my next video, I am revealing the 3 offshore LLC structures that cost under $500 to set up and are fully compatible with IBKR in 2027. Drop your current brokerage in the comments. I will tell you in the next video if it is nomad safe in 2027. Subscribe so you do not miss that one. It is the final piece of your borderless wealth plan.